Here are 4 news stories from the world of cryptocurrency. First news. AI predicts Solana price in the second half of 2024. Since late 2023, Solana has been on an upward trend. During this period, its token price surged from below $20 to surpass $200 multiple times. Additionally, there has been a growth in new projects on the token's blockchain. In early 2024, Sol's price increased by 48.79%, reaching over $200 twice in March. However, recent trading has been somewhat subdued. Over the last 7 days, the token lost 13%, dropping Solana's price to $150. Alongside price fluctuations, the project's ecosystem has undergone several updates, including a recent adjustment to block validator commission structures in late May. Considering all events within Solana's network over the past 8 months, artificial intelligence algorithms have been tasked to determine the potential year-end price for Sol in 2024. Machine learning algorithms forecast that Solana's dynamics will sharply contrast recent weeks in the coming months. It is anticipated that until mid-October, Solana will trade relatively steadily within the range of $150 to $175. However, the final quarter of 2024 is expected to bring significant changes. AI predicts Sol will take off in November to $200 and exceed $365 by the end of December. Following this peak, a correction is anticipated, with Solana ending 2024 at $324, which is 142% higher than the current price but 11.21% lower than the projected annual highs. Nevertheless, technical analysis contradicts AI calculations, predicting relative stability in the short term. According to technical indicators, Solana could see a substantial upward movement, up to 53%, if it falls below the $143 support level or exceeds resistance at $178. Second news. European Commission chooses Iota Web3 ID. The European Commission has announced the selection of Iota's Web3 ID solution for the current version of the European Blockchain Services Infrastructure, EBSI. On June 13, the European Commission announced the selected participants for the second group of its EBSI. Among them is Iota, an open-source cryptocurrency distributed ledger and ecosystem. Iota's selection highlights its Web3 ID solution, developed in collaboration with Walt.id, IDNOW, Bloom Wallet, and HAVN. According to Iota, this selection marks a significant milestone in its identity solution efforts. This opens the door for regulatory discussions on KYC and privacy in the Web3 environment. This is particularly relevant now as many regulators are considering their approach to decentralized finance. EBSI was launched by the European Commission in 2023 as a pilot platform for distributed ledger technology, DLT, solutions across various sectors. Each group includes no more than 20 projects, providing them with a controlled environment for testing, verification, and direct interaction with regulatory bodies across the European Union. In addition to Iota, selected projects include real estate, exchange DG shares, documentary and business-oriented blockchain DoxyChain, blockchain and smart contract security analysis project HackN, and an AI-oriented knowledge infrastructure project Origin Trail. The specific use case of Iota's Web3 ID solution aims to reform the traditional implementation of Know Your Customer, KYC, processes, often bogged down by inefficiencies, high costs, and privacy concerns. The solution involves implementing a reusable KYC system through DLT and tokenization to enhance security and user control over personal data. According to developers, the process begins with remote identification conducted by IDNOW, ensuring compliance with EU anti-money laundering, AML, and KYC rules. With Iota Web3 ID, verified identities are tokenized and stored in the user's wallet as an individual token, usable across various Web3 applications for identity verification without disclosing personal information. This initiative aligns with the EU's active efforts to implement a digital identity scheme. On May 21, it updated its European Digital Identity (EUDI) regulation, initially released in February 2023, with requirements for full implementation by 2026. The regulation mandates EU member states to provide at least one EU digital identity wallet to all citizens and residents. These wallets are intended for electronic signatures and document storage, ranging from university diplomas to train tickets, seen as the next evolution in the lives and work of European citizens. Several ideas for its creation and implementation have already been discussed, including possible use of zero-knowledge proofs. Third news. Trader loses $310,000 to fake Biohe. An investor claims to have lost $310,000 due to a suspected fraudulent cryptocurrency trading platform after learning about it through a friend request on the professional social network LinkedIn. In a consumer alert from the Securities Division of the Washington State Department of Financial Institutions, DFI, on June 13, it was reported that the investor used the purported platform for trading cryptocurrency called ETH Finance. The investor learned about ETH Finance from a random LinkedIn friend request, according to DFI. The department added that the investor transferred a total of $310,000 from their DeFi wallet to the platform in hopes of profiting from cryptocurrency trading. When the trader tried to withdraw part of their initial sum and reported profits, they were told to add more funds to complete a smart contract and then withdraw funds. No additional funds were sent by the investor. The investor was unable to withdraw funds from their account, and their account was blocked, said DFI. The regulator stated that the case appears to be a prepayment fraud, although it noted it had not verified the allegations. Prepayment fraud is a type of scam where victims are promised significant sums of money, goods, or services in exchange for a small upfront payment. Washington DFI's cryptocurrency fraud tracker also shows that the platform was mentioned in a previous complaint. A California resident reported losing over $165,000 after meeting someone online who offered to teach them how to make money trading cryptocurrency options. The investor realized it was a scam when the customer support CEO of ETH Finance on Telegram asked them to send 25% of their profits as taxes to complete the withdrawal. Fourth news. Manta Network launches $50 million ecosystem fund. Manta Network, a modular Layer 2 network for zero-knowledge applications, has created a $50 million ecosystem fund through its parent company Manta Foundation to accelerate project development on its blockchain. The allocation of $50 million will last for 1 year starting from June 15, Manta wrote. All applicants successfully receiving our grant or direct investments will be eligible for the EcoFund program. Zero-knowledge proofs, ZK, are cryptographic protocols allowing one party, the prover, to prove to another party, the verifier, that a specific statement is true without revealing any details about the statement itself. ZK proofs are crucial in the cryptocurrency world for enabling anonymous transactions without disclosing transaction details or user identities. Of the $50 million ecosystem sum, $35 million will be allocated towards direct investments in promising projects on the Manta network. Meanwhile, $10 million will be set aside for ecosystem grants. Finally, $5 million will go towards hackathons, $4 million for general grants, and $2 million will be allocated for AI, meme coins, and ZK-related projects. Manta stated its focus on projects with a clear path to disrupting the market and achieving significant growth, ensuring their long-term success in our ecosystem. Currently, the total locked value, TVL, of the Manta ecosystem is $54.7 million, significantly lower than its peak TVL of $684 million in March. The decline is largely attributed to the conclusion of the new paradigm cryptocurrency yield farming program, during which users withdrew their funds en masse.